All right, so welcome to this mini course on personal credit versus business credit. Now, the main objective is for you to understand the key differences between the two. All right. Now, you might hear the term credit and think it's the same, but they're going to both be a little bit different. All right. One, personal credit, you have to have personal credit before you can even establish business credit. All right. Business credit is going to allow you to obtain much higher credit limits and certain things that won't really affect you, such as credit card utilization. All right. Now, a personal credit score is going to range anywhere between a 300 to a 50. All right. Where a business credit score is going to range anywhere between a 0 to 100, with 100 being higher, 80 being average. For the personal side, anything above a 680 and you're pretty much golden. All right. So I'm going to go ahead and break this down a little bit more for you. All right. All right. So when we're talking about personal credit is going to be based solely off of your social security number. All right. And it's going to be four common forms of credit. You're going to have your revolving credit, your installment credit, your charge cards, and also service credit. Now, revolving credit is going to be based off of your credit cards. So you have a credit card that has a credit limit of say $5,000 and you only use up say $200, then you're just going to have a minimum payment to pay back, right? But the difference is once you pay that back, say you paid a minimum payment of $200 and you continue to pay it off, you might get a $0 balance, but you can use it again. You can continuously revolvingly use that credit. All right. Now, where installment credit is going to be more in the terms of your mortgage or your car loan. And basically, once it's actually paid off, if it's like a 5-year or 6-year loan for a car note, once it's paid off, that account gets closed. And then for you to use that money again, you have to actually open up a new account and get pre-approved. All right. So that's why, personally, I like revolving credit because I don't have to reapply. Now, obviously, when it comes to a mortgage, you don't have that choice. You want to pay it off. You're not going to be using the mortgage loan again. All right. Now, a charge off is something typically where you have to pay it off in full every single month. A lot of times, American Express, they have their platinum cards that are made to where you use a set limit. If you spend $5,000, you got to pay it back in full within that 30 days. Then you have service credit. Service credit is going to be like your utility bills, your cell phone bill, just like that. All right. But typically those don't really report to your credit. Verizon, AT&T, water bill, electric bill, is what you consider service credit. So things that actually affect your personal credit is going to be your payment history. You got your amount owed to your credit limits. You got negative accounts, your history, and your hard inquiries. Now, your payment history is going to be by far the biggest factor that's going to hurt you. This is going to be 35% of your actual credit score. So if you miss just one late payment, and if you got a perfect 850 credit score, that can drop your score by over 100 and something points, 165 points to be exact, since it's 35% of your credit score. All right. So always make sure you make your payments on time. Next is going to be your amounts owed to your credit limit. All right. So you have a car loan and your car loan is brand new, that balance is going to be high. But once that car loan gets to the point to where you only owe about, say, $1,000, that amount owed is going to be very low. And therefore your credit score is going to be a little bit higher. And that is typically why once you pay off a car loan or an installment loan or a personal loan, your credit score is going to drop, because that right there actually was helping your credit score. But once you pay it off, now that account is no longer into the actual calculation of your credit score. So if you had another car loan, they'll say it was at 80%. Now that's no longer going to basically positively affect you. All right. Your negative accounts is going to be things such as if you got any late payments, collections, charge offs, anything like that. You do not want any of that. All right. So make sure you're paying your bills so that you don't get any charge offs. All right. So they're going to look at that. If you got one account negative, okay, cool. Like you said, we talk about your payment history, right? You can have 100% payment history. And, if you got a collection or something like that for an account you didn't owe, a company takes you into collection, that's still going to hurt you. And then your credit history. Now, your credit history is actually more important than your actual credit score. because you can have a 680 credit score, but you got 30 positive accounts, and that's going to be better than somebody that has a 750 credit score, but they only have 2 positive accounts. All right. So the more positive accounts, the better you are. All right. You can literally be 18 years old and have a 750 credit score, but you cannot go out and go and buy a $200,000 mortgage with just only a Capital One credit card. It's not going to work. All right. And then inquiries. Now, although inquiries don't really affect your credit score a lot, like it's a very small factor, you can have a 750 credit score, but if you got 30 hard inquiries, they can deny you. And the reason why is because, for one, it looks like you're thirsty. It looks like you're begging for money because you're going by asking everybody for a loan. Now, these lenders do not know whether you got approved from Capital One, whether you got approved from Navy Federal, whether you got approved from whatever, because you could have just got approved, or it could be a situation where you got this personal loan and it's just not showing on your credit. All right. So they're not going to want to do it. I mean, think about it like this. If it was your friend, right? If, one of your friends asked you for $100, right? And then, you're thinking about it and you found out that, your friend asked 30 other people, you're going to be leery like, okay, wait a minute. These other people might have gave him money too. So if 30 people gave him $100, for one, what do you need the money from me for? And on top of that too, if you're getting all this money from everybody else, how do I know you're going to pay me back? Right. So that's how inquiries are. So you really want to have less than 3 inquiries when you're trying to actually get approved for, any kind of funding. All right. So regardless, don't worry about inquiries and say, okay, this is going to affect my score by 50 points. It's not. It might hurt your score by maybe 10 to 15 points, but it is a factor. Like if you're trying to get a credit limit increase, they may decline you because you have too many recent hard inquiries. So that's why it's very important to remove inquiries from your credit report. All right. Now let's go ahead and talk about personal funding. And that's basically going to mean getting lines of credit extended underneath your social security number. All right. Now, basically, the more positive your payment history is, which again, you really want to be above 100%, is going to mean the higher your credit score. All right. The lower your balances are on your credit line, the higher your credit score. Now, also, the way the banks look at you is that the higher your credit score is, the more likely you are to pay them back. And the more likely you are to pay them back, the more likely they are willing to lend to you. All right. So that's why having a higher credit score is going to be even better. And on top of that, too, what also goes to this factor is your higher your credit score is going to equal lower interest rates. So if you have a lower interest rate, that also means that you're going to have a lower payment. And by you having a lower payment also means that it's easier to pay back, which also double increases your chance of getting approved. All right. So that's something that you definitely want to keep in mind when it comes to getting personal funding. All right. So the other thing too, about when you have in your personal credit, if you have a credit card for say $10,000 and you max out your credit card, you will drop your credit card utilization, because your credit card utilization is going to be 30% of your credit score, which that can really hurt your score. All right. It's just not good. Okay. So you always want to keep your credit card utilization balances low. Most people say less than 30. I say in the single digits if you want to keep your credit score high. All right. A lot of times you might go to Best Buy and they'll say, hey, you can go ahead and get this TV. The TV is $2,000. They might only get you approved for $2,000, and therefore you don't have a credit card that's maxed out. So a tip that I always say is, if you're going to go that method or go that route, try to get approved for $5,000. Ask for $6,000. They may do a counter offer and just give you $5,000. Therefore, you're only using up $2,000. You still got $3,000 left. Although it might be a little bit high, you can still later on pay that down. And typically they give you like no interest, for 12 months. So keep all that in mind when you're doing this. All right, then let's go ahead and compare the business credit versus the business funding. Now with business credit is going to be tied to your EIN number as opposed to your social security number. So basically your EIN number is it's your employee identification number. So it's just like your social security number, except it's for your business. All right. So you're going to be building business credit basically the same way that you build personal credit. All right. You're going to be establishing a business credit score by applying for lines of credit with different vendors. All right. You got tier 1 vendors such as Xerxes, Quill, Granger. You can apply for merchant accounts, with, Stripe, 5-star processing. You can do, it's so many different ways you can actually build up your business credit score. Now, just know that, to actually start building a credit score, you do need to obtain the DUNS number with Duns and Bradstreet. You can just go to the website and put in your information for your business, and then go ahead and get yourself a DUNS number, right? Typically, it can take anywhere between 10 to 15 days to get this, but once you get it, you're good to go. And then one very important factor that a lot of people overlook is going to be your NAICS code. So if you have a business that's considered high risk, such as, say credit repair, real estate, trucking, cannabis, anything like that, it's going to make lenders not really want to lend to you. All right. And sometimes that can put you in a category where you're automatically denied. So make sure that your NAICS code is not considered high risk. So if you're doing like credit repair, you might want to put down consulting, or you might want to do marketing for your business. So make sure you know your NAICS code before you just go ahead and go to the bank and say, hey, this is what I do. Because if you tell them what you do and it's high risk, they're going to put that down and it's going to mess you up. So understand that. All right. So yes, you're going to need to apply for lines of credit to build your credit. You want to obtain a copy of your business credit report through nav.com. And then some of the things that you're going to want to start doing once you actually start building up a Paydex credit score. A Paydex credit score does range from a 0 to 100. Now with 100, with being the highest, typically anything above an 80 is going to be considered good or great. All right. It's not necessary to have a Paydex score to actually get approved for business funding, right? But if you want certain things to be 100% in your business name, such as in a vehicle or an apartment or anything like that, you're going to want to get a Paydex score so that you can put things into your business name. Now, here's some of the benefits to having business credit. Now, since business credit is tied to your EIN as opposed to your social security number, it is not going to report to your personal credit profile. Now, the other thing about that is there's no such thing as credit card utilization. By being no such thing as credit card utilization, that means you can actually max out your credit cards without it harming you. Now, on the personal side, if you max it out, it can drop your credit score by 30%, which is not a good thing. Business side, there's no penalty for that. All right. So by having business credit, if you did have any debt on the personal side, you could take the debt off your personal side and transfer it to your business. And that also boosts your credit score. And then at the same time, you can go ahead and apply for another line of credit on the business side. Since your credit card utilization is going to be low, you're going to have a higher credit score. And therefore, you can, like I said, just manage your finances much better that way. All right. Now, to get approved for business, it can be a brand new business. You can open up the LLC today, and then as soon as it's registered with the state, you can go to Truist or Key Bank and get, a $50,000 no doc, right? Now, typically to get a no doc loan, your business has to be over 2 years, but there are going to be some businesses that'll give you no docs. But typically you can still get a credit card, at least for $20,000. For instance, if you go to Truist, you can actually get a $20,000 credit card on a brand new business. So here's the thing, because you can have an unlimited amount of LLCs. Like you can have 5, you can have 10, you can have 15. If you go to the bank today and say, you know what, I want to open up these 5 business bank accounts. If your personal credit is good and they give you a business credit card on your first LLC and it's for $20,000, they're going to give you $20,000 for each and every single one of them businesses. It's not going to be like where it's your personal, where you might get a total of only $10,000. Nope, they give you $20,000 for the first one, and they're using you as a personal guarantor. You're going to get $20,000 for each of those, and therefore you just got $100,000 just off of a brand new LLC. All right. So that is going to be a really huge benefit. All right. That's what we call the credit card stacking. You know, the business stacking blueprint is about stacking up your LLCs. All right. So if you need more lines of credit, if you need more funding, easy way to do it, get some more LLCs. I typically open up a brand new LLC every 6 months. All right. So that's going to be the quick rundown on the personal versus business credit. So with that being said, I will see you inside the training.